Good morning. Don't we economists just love our graphs, don't we? So I'm going to give you a few more here in a few minutes. All right, I'm going to talk this morning about livestock, and then corn and soybeans are the ones that I'm going to talk about the situation and outlook. Let's start with livestock first. Where are we at? Production for 2017, we are up in all of our major livestock. So if we look at it, our overall red meat and poultry production was up about 2.5% in 2017, and we're going to continue to grow in 2018. So we're going to be about 2.8% having more red meat and poultry production in the United States this year. If we look at specifically, broiler production was up about 2.1% in 2017. We'll see continued increases in 2018. Turkey production was down in 2017, about 0.3%, so a little bit stable but down, and will be continuing down in 2018. Pork production up 2.5% in 2017, and is going to continue again, as I said, to grow in 2018. And then beef production. This is where we're seeing the big increases in production aspects. Beef production was up about 3.8% in 2017. We're going to be up about 4.9% in 2018 at record production levels. All right, so that's just kind of the idea of where we're at. We are producing a lot of red meat and poultry. When we look at broiler production specifically, broiler production, and when we think about this accounts for 51% of the meat disappearance in the United States. So we eat a lot of poultry. All right, 2018, if we continue to see this as a predicted as amount, this is going to be our 5th consecutive year of record-setting production levels at a broiler level. Poultry productions, then, we have to consume that. So exports are growing. We look at poultry supplies, though, when we look at it, population's growing, but when we look at it on a per capita, 0.2 pounds per capita, smaller overall due to that lower turkey production on overall, broiler production's going to be up, all right? So on a per capita production level. If we add into it, why is this all growing? So some of it is just profitability. When we look at these are I come up here sometimes, I'm going to talk about livestock and I'm going to talk about corn and beans. Typically they don't do well. If one sector, if livestock's doing well and is making some profit potential, corn and beans are not doing so well. And vice versa. If corn and beans are doing well and there's a lot of profit potential there, livestock isn't. Right now we're on the aspect where livestock has the greater profit potential of these different types of industries. All right, when we look at that, we're growing. We've also added poultry slaughter capacity. So with that increased production means that we've added that, we have it. What does that mean overall? This is basically increasing our reliance on exports. All right, 2017, we exported about 16% of our production. All right, that was up about 1% of the production relative to what it was in 2016. I'm going to point, I've got a couple things because here, towards the end, I'm going to make some points here. Mexico, though, which is our biggest export market, is down 10%. So we're exported 10% less to Mexico, even though our exports overall were up. When we look at pork production, we are on the 4th year of record production if we have this in 2018. So we are 4th year of producing a lot of pork. 2017 production was up about 0.8 pounds per capita, and we will see about a 1 pound per capita growth in pork production then in 2018. Our exports of pork, we export 21% of our pork production. All right, so that was increasing. So we increased our exports in 2017 by about 3.9%, and they are projected to increase about 4% in 2018. All right, just to give you a little bit of a comparison though, so up here is that the U.S. exported about 6.7% more weight in 2014 than the European Union in pork. All right, in 2017, we exported 2.5% less weight than the European Union in pork. EU is growing in their pork exports. We're increasing, but we are not increasing our pork exports at the rate that the EU is, which is a big competitor of ours. So when we look at this, 7% less to Japan, 17% increase is what we're expected to Mexico, and 24% increase to South Korea. All right, those are our biggest export markets for pork. So we're increasing, but again, we're not increasing at the rate that the EU is. So yes, we are exporting more pork to Mexico, but we're losing market share to Mexico, to the EU at the same time. All right? When we look at commercial beef production, all right, so this is basically, these are my graphs up here of my quarterly production. We're seeing the beef production basically is going to continue to grow, and this is our fastest growing one here, all right? Record production for 2018. We're going to see, as I said, it's going to increase about 4.9% in 2018. We have less animals than we did in the 1950s, but we're producing more beef. A lot of that has to do with the fact of the efficiency of which we're producing, the carcass weights of the animals that we are getting. All right, so this is really good. We are good and efficient producers in agriculture in the United States. What's that mean? If we look at this, 2017 saw record profit potential for cattle feeders, all right, on a national perspective. We're still going to continue to grow that. The cattle herd is realistically, we will see in the next week when the cattle report comes out, we will see an increase of about 650,000 head to about a 94.2 million herd capacity at this point in the United States. All right, we are still growing at expansion levels. We will probably see that stabilize in this year in 2018. But that means, though, that as we've grown this herd, that basically means that we're going to see continued production. So if you look at my graph, so even though 2018 is going to be record beef production, 2019 is going to be even greater beef production. Because we're going to, even if we stabilize right now and don't grow the herd anymore, we have all of those calves that we're going to put on feed eventually, and we're going to see even greater beef production in 2019. All right? Well, we eat a lot of beef, and as Mark was pointing out, the economy's doing well, which is really good for beef production because we tend to eat the higher valued of that in those fine dining restaurants. All right, but the other, as I said, our importance and our reliance on exports is growing with this continued and great expansion in our livestock industries. All right, beef exports, we saw it increase at 11% in 2017. We will see exports increase in 2018, barring anything else coming through, by about 6%. All right, Japan increased. If we look at the specific countries where the majority of it goes, Japan increased by 28%. Canada was up 2.3% in 17, Mexico up 7.5%, South Korea 6.1%. All right, so our exports have grown. Where do they go? Over here, as I'm pointing out, where do all of our goes? This is about 100%. So 30% of the poundage, all right, of the beef that we export, 30% of it goes to Japan, rough. South Korea takes about 22%, Hong Kong about 14%, Mexico 14%, and Canada 8%. Notice anything with these countries? Reliance on trade exports. Right now, the United States faces a 39.5% tariff of beef going into Japan. They take 30% of our beef that we export. Australia, significantly lower, and has trade agreements to even lower it. We are facing markets that our trade is going to be, if we don't have some of these bilateral agreements, is potentially devastating for some of these industries. Also, I want to point out, look at the other in beef, and as pork, as I pointed out on our major ones, and poultry so far. What are the other countries where our biggest export markets are? Are Mexico and Canada. We have a lot of things happening in 2018 that could potentially have massive impacts for livestock industry, all right? So where are we headed? I'm making an assumption, right now, as I do, that this is kind of the situation we're at. And I'm making it that the status quo is as it is, and we aren't going to see anything that I can't predict out there. Feed industry, if we remain current, that should be good. Carcass weights are going to continue to increase. Any loss in currentness of those carcass weights is going to have significant issues. Packers are going to have, because of the fact that we are growing supplies, packers will have greater bargaining power because of the fact that they have ample supplies for that. And if we lose currentness, there's going to be greater discounts. all right? Expansion favors industry participants that are closest to the final consumer. And right now, those industry participants that are closest to the final consumer are the packers, all right? Then it's the cattle feeders, all right? So then the cattle feeders, as I said, they had record profit potential in 2017. They should still have a profit potential aspect in 2018. It's just not going to be as great as it was in 2017. Where we start to see is retail beef is going to fall because of the retail beef price will decline because of the fact that we are having such expansion, and we're going to have continued growing capacity and growing beef production, all right? Where do we look at it? As I said, feeders will start to see some decline in their profitability, but they will still be profitable. Margins are going to shrink though. Cow-calf, if we look at this is where we're starting to see the greater amount of the shrinkage of the profit potential because they're furthest away from the consumer, plus also we have a large amount. The one thing that you have is with the cow-calf is if we have the continued drought and we start to see more of these animals being taken off forage at a rapid pace because that drought gets worse, then by about Q3, we might start to see some short supplies of feeders and calves, all right? But that's a weather thing that we can't necessarily say. It's just something that we have to pay attention to in 2018 to start to see that. All right, otherwise we have ample supplies of those feeders, and those feed yards will be able to source those animals quite easily. When we're looking at prices then, so my forecast of here when I'm looking at it, broiler price directions down, pork I give you a little bit of a percentage decline over where they were at quarters from last year. All of our production's up basically, but hog prices, as I said, down a little bit in the first quarter of this year, but then up a little bit more simply because of the fact of the demand. When we look at beef prices, finished cattle will be down for about the first 3 quarters of the year, up a little bit in the fourth quarter because we saw some declines in it for this year. So just the idea on the production of prices, but we're looking there. Now, let's go on to grains, or soybeans right now. The theme for corn and soybeans is basically production. We are, remember what I said, we're efficient producers. We're really good at producing, and it shows. And you know, it's starting to get everywhere else. So this is the world soybean production. If you go back, the first on the left is my 2011-12 marketing year, and then ending in the 2017-18 marketing year. So this is basically what was last fall's harvest and the prediction for what is going to be it for Brazil. All right, world production's at 12.823 billion bushels. All right, the U.S. produced about 4.39 billion bushels. Brazil production is about 4.041 billion production. That's what's forecasted by the USDA currently. And Argentine production is about 2.058 billion productions. So overall, that's slightly down relative to last marketing year. However, it's still really high. We're good, all right? So when we look at this from prices, all right, I come back to this because I point out Brazilian production right now is 4.041 billion bushels. That's what the USDA is predicting right now. But if you look at if you look at South American consultants, they're raising their expectations of what the Brazilian harvest will be. So we may end up still with the world production that was greater than what we did last year. All right. Bullish factors. Let's start with this first. 2018, the global demand's strong. It is. To say that demand is not strong is an inaccurate statement. The issue is that demand is not growing at the pace in which we are increasing our production. All right, so we still do have strong demand, and our strongest demand right now is for the U.S. crush. All right, it's up about 2.5 million bushels from last year, and it's projected to be up about 10 million bushels for this marketing year. All right. If we look at its soybean oil stocks are down about 2% from October. So we could potentially see the USDA eventually come through and raise their projections for soybean crush slightly in the next couple of weeks, in the next couple of months. That's my bonus for soybeans. Don't throw tomatoes, okay? So here's the bad news for soybeans. Despite that strong crush, we have issues with protein content in the United States, lower protein for this year's harvest. It indicates a lower quality, all right? Brazilian conditions, as I said, are good, and they're probably based at, if we believe South American crop consultants, we will probably have a larger harvest in Brazil than what the USDA is expecting. All right, so they're looking at that. Now another theme I want to talk about is trade. What we're seeing is trade. The USDA has recently revised downward their expectations for soybean exports. Currently, at this point in the marketing year, we have exported almost 60% of the soybeans that we will export in the marketing year. All right? If we assume that that is truly the case and the exports do not pick up because of the aspect that soon Brazil will be able to have this year's harvest of exports, if we assume that is the case, we will see that the USDA will have to revise downward their exports by almost 200 million bushels. That's huge. All right, so we're going to see the USDA. If we look at this, where are we going? China takes almost 2/3 of the exports of beans that are on the world market. All right, we export almost 2/3 of our beans to China. All right, now if we look at that, we are down 30% in our exports to China right now. The other aspect about that is where are they getting it? Is they're getting them from Brazil. They have not declined in their exports. They're just sourcing them rather than from the United States, they're sourcing them from Brazil. And given that, if they continue at the rate that they will, they're basically going to take most of the beans from Brazilians harvest before they harvest this next year. So their ending stocks, Brazilian, if I look at just Brazilian stocks, most of those are going to be gone before they start harvesting again. So they're trying to get every available bean they have right now from Brazil before the new harvest comes in. And typically, in about the middle of February is when we see the shift of China no longer taking beans from the United States, but getting them from Brazil. We never saw them really coming to the United States this year. So it's an issue. Is it because of the import specifications on soybeans? They had a change in the rule at 1% this year, starting in January. I don't think that's the issue so much right now, but going forward, technically, only up to 1% of foreign material will be allowed as an export criteria for beans going into it. They're afraid of weed seeds going in. Currently, our number 2 soybeans allow up to 2%. And so we're going to have some issues on cleaning of those beans in order to be able to reduce that. So as I said, so here's our soybeans commitments. Total commitments to date are 15% down to date. Exports to China are down 26%. All right, so if you look at this bar chart, the blue right there, that's 60% last year of our commitments that went to China. We're down 26%. All right, so if the USDA projections on that, USDA Brazilian exports are going to be up, USDA is going to be down from our world exports. All right, that's going to have a big impact, and we can potentially, I don't see how the USDA can't eventually come through and revise downward their export expectations, which is going to put a bearish aspect on soybean prices. Corn supply, again, it's another aspect of very large production. Decreased corn acreage, we saw a decreased corn acreage basically, but we still are seeing large production and the supply is basically stable. So our carryover is going to increase by 6.8%. So overall, we are just efficient producers, barring even the weather. So when we look at this, 3 months of the marketing year, we're on pace to have about a 5.5 billion bushel for ethanol production, using corn for ethanol. All right? The biggest thing, we were doing great on ethanol production for those first 3 months. Then we've tapered off. December saw a huge tapering off of ethanol production, and we started to see declines of about 58,000 billion barrels per day in December. It was the first time we saw declines like that since August. So that's down. When we look at it, our exports then are down about 93.6 million gallons in October of our exports of ethanol, all right? This is gonna play into the profit potential for ethanol, which means that there won't be as much corn being going towards ethanol production, All right, we're down about this. Where is it not going? The exports are decreasing right now for ethanol. And again, a lot of where that's coming is that shipments to Brazil have lowered after they've added a 20% tariff implemented, and China's implemented a 30% tariff. They're basically trying to grow their own ethanol production industries. Corn exports. When we look at corn exports, so this is just the actual corn. 17-18 marketing year, our commitments for this year are down about 23%. All right? Specifically, the major countries that we go to, our major markets that we export corn to are Mexico, Korea, and Japan. Mexico commitments are down about 2.6%, but our sales, our outstanding sales to them are down about 15%. All right, so Korean commitments are down about 60%, Japan commitments are down about 14.5%. All of this plays into it. All of these, basically, when we look at these, they're all bearing and having aspects on our trade, all right? Bullish factors. We do have strong cattle on feed, right? I talked about that. We're going to see a lot of animals, and they use the most of our corn. So that's a good thing. We could potentially see that looking at it. We will likely see lower acres planted in 2017 for corn. Where are those acres going to go? They're going to go into soybean production, more than likely, some of them. So for 2018, we will probably see more acres of corn more acres of soybeans planted than what we saw of corn. All right, that hasn't happened for a very long time. Bearish factors, dry weather in Argentina, any persistent La Nina effects. Demand for corn, it's already factored into that price. All right, and in fact, the reality is the demand is stronger exports are factored into the price. So we have some aspects for bearish, but I think most of it's there. I don't think corn, there's a lot more potential for it to go downward. I just don't think there's a lot of potential for it to go up. Large crops, corn supply, overall, what am I thinking for 2018? We have large crops. We're going to still see large production probably in 2018. It's going to take us some time to crunch through this supply. And we need exports to help us absorb this large supply. Corn markets have adjusted downward, and that's why I say I don't think there's a lot more potential for them to go down. I just don't think there's a lot more potential for them. I don't think there's much potential for them to go up. Soybean market is still overpriced. It will probably trend. Reality will probably do the seasonal trend between starting now, it started a couple weeks ago, probably now until the end of May. But after that, unless we have something going through and we get the acres that are planted, that seasonal trend will probably end early, and next harvest price is going to be significantly lower than what you saw this year. All right, so unless we have some type of weather catastrophe, there's limited upside potential for these because of all of this news. Depending on the acreage, when I go into this, specifically I'm running out of time here. Sorry, my trend yields, where am I looking at it? Get to the point right here at the bottom, you can see my assumptions. But if I look at this for 2018, as I said, I don't think there's much potential, but we could potentially, if we have the lower amount of acres in corn and we just stay at trend line yield, we don't have anything above it, we could maybe see 10 cents more at harvest price than what we saw this year. Not a lot. Not a lot of movement, all right? Soybeans, where does it go? If we see the acres that we're expected to see, and we have trend line yield, so nothing above trend line yield, basically, where are we looking at my stocks to use? Our cash harvest price could be $8.46. So that's significantly lower than where we were at. All right, so there's a lot of downside potential. The thing is, 2018 is going to be a big year. We've got a lot of things going on these that are impacting it, and most of them are dealing with trade outside of the production. Argentina, the export tax for our soybeans is declining by 0.5% each month starting in 2018, so it started already. That's going to put export pressure. It's going to allow Argentina to export their soybeans, and they'll become a larger player in the export market already for soybeans. All right, the value of the dollar, I say, is beginning to increase. It dropped last week. But the thing is, though, if we see an increase, that's going to play into it. All right, so we've got those things. China is an aspect we have to pay attention to. Why are we importing such a significantly smaller amount to China? You know, that's a big thing. and then the other is leaving NAFTA. If you noticed the theme of one of the things I was talking about in here, whether it's livestock, whether it's corn, or whether it is soybeans, one of the top 5, for all of these commodities, one of the top 5 countries that we export to, 2 of the top 5 for all of them, is Canada and or Mexico. Any discussion with NAFTA is going to be followed. If we leave NAFTA, it is going to have some significant trade implications for these particular commodities. All right? Thank you, and I've run out of time.